Hi, Mark Rogers here. It is a pleasure to come and chat with everybody once a week or so, and I wanted to share an update as to how to grow your money safely and securely. Yes, making money safe in these turbulent times. Got some exciting news to share. I'd like to do it inside of 5 minutes, so let's go ahead and get right to it. We have basically, there are carriers, insurance companies that are growing your money guaranteed, and these days here, right here, they're doing it at a 5% clip. There's a lot of insurance companies offering a 5% clip that basically says you can get a 3-year, you can get a 4-year, you can get a 5-year, you can go all the way out here to 10 years, and they are getting a guaranteed compounding rate of return on your money. Now, what I'm excited to say is there is a company giving an 8% coming up here for the first year, and thereafter it's going to be guaranteed right around 5%. It's not an exact guarantee, but I've been told it's going to be within a couple basis points on that fixed. But most importantly, there is going to be an or. Let me get some other colors on here too. I'm excited because this is where a lot of confusion comes in. There can be a fixed rate, as we're just talking about right here, which is a insurance company declaring a rate on money itself. But as time goes on, there is even a better way that people can grow their money, is basically utilizing something called indexing. Indexing is what it is. So we're going to go ahead and share what indexing is. Very, very important to understand. This is growing money. Remember, some people would like to be on Wall Street because of the fact that it allows that growth, but they don't want the risk. Indexing offers the money to grow based upon the performance in the Wall Street or on the securities markets. So if the index is doing this, what you're able to do along the way is gain the value in your account, but then when it goes negative, you are flatlining and you continue to keep the value in your account. So there is a floor that is set in place that says you cannot lose your money in your account, but you're also able to gain money based upon the index performance. It is known as a cap. These caps are being set right now on S&P 500 around 10%, 9%, 11%, 12%. The caps are really nice. So if the S&P 500 over the next 12 months does something along the lines of 9 or 10 or 11% or 15%, you'll be capping out at whatever the cap is, 10%. Or you could go ahead and say, no, I just want to be specifically over here I want to be in fixed. And so you would have your 8% for the first year and settle in 5 years after. Or you can say, I want to have indexing to go on as well. Or you can actually do a mix of the two. And so you could say, I want 50% of my money. I want 50% of my money in a fixed account, and that's always a good thing to do. And I want the other 50% to capture some of the gains that are out there in the indexing side of things. So every year you can change back and forth as to what you would like to see for the next 12 months. Now, I do that. That's what I'm doing with clients, is I'm doing that along the way, helping clients build and looking and evaluating and say, how much do you want to have in the fixed? How much do you want to have indexing? We're trying to secure our money so that it continues to grow and beat this inflation that's going on. In retirement, we need to have a growing account with never the possibility of losing money. We do not want to lose money. It takes us backwards. So anyway, excited to say that there is some huge opportunities right now in the marketplace. One particular company offering that 8% out of the gate, huge deal, and then leveling off around 5, or you can choose some indexing on that as well. Look me up. You got my number. Happy to spend 30 minutes on the phone or do a little Zoom call where I'm sharing my screen like this. And so with that, let's chat. Look forward to talking to you very soon, because these are time sensitive rates that are going on, and I'm looking to make sure that retirees are building and building their money as they go along. We'll talk to you soon.